What's up, traders? I'm Mark Bauman of StartTrading.com. I'm here to talk to you today about SPACs. They are special acquisition companies. Now, before we get started, be sure to give this video a thumbs up with a like. If you haven't already, please hit the subscribe button or the notification bell so that you can get more notifications when we post more educational content like this for you to help you earn money with us. Now, for those of you who've never heard of a SPAC, it's essentially a shell of a company made up of investors who are looking for to raise capital through an IPO or initial public offering. And their plan is to use that money to acquire an already established business or company. SPACs are often a hot ticket item for traders, and lately it's been going through the roof. And we had caught Mr. Desjardins, who we like to watch from time to time and comment on because he has some great picks, and he's very heavy in the SPAC market. For his views, he just posted a great video about SPACs and how they've been impacted. And what he covered in that video, we're highlighting today. He went and identified it and showed how a lot of these special acquisitions seem to happen at the end of the year. So that market is very hot at the end of the year because that's when most of these get announced or finalized. And there's a chart tracking basically the SPAC prior to announcement that's going to find a special a company to merge or acquire. Then there's the announcement that, or the hint, the rumor, and it shoots a spike up. And then it trickles back down after that rumor kind of hype kind of dies off a little bit. And then you'll see people sell off. And then the actual merger or actual acquisition will be coming. And you'll see it spike up again. And right after that, again, the luster dies off because all the people that buy in initially, and you see this big spike from the initial investors, and then you see the FOMOs come in right behind that and try to get in on the deal. So, SPAC, and basically those are different phases that this SPAC goes through. So, the SPAC goes through several phases, which create a few different announcements and things that create this spike and drop and spike and drop. And that's where you don't want to get caught in the spike. You'd rather get caught after the drop. But people rush to buy that stock while it's still cheap before the acquisition happens. So what you want to do is take a look at some of the SPACs that you're in. This is my recommendation because we're in a volatile time. And this applies to any time, not just right now. We're in beginning of March 2021, which had huge fluctuations in the market due to the pandemic. Huge fluctuations in the market due to increased bond yields, to adjust for inflation for the pandemic, and all the money supply that's been pushed out there. So and we're also due for a correction. So it's funny, but the correction's either happening now, which people still haven't established. I haven't established that because look at Disney, look at Starbucks, look at Caterpillar. Great companies, still doing great. They had a few adjustments due to the bond yield, so we could still be in for a correction. But this would apply to any time. For special acquisition stocks, that's what they are. They're there for the special acquisition, and then after that, nobody cares about them until the actual acquisition happens. And after that, nobody cares about them as well because they're waiting to see what that company's earning and look at the PE ratio, etc. So SPACs, you need to track your existing SPACs, put them into relation prior to the bond yields, and see where they are in their rise and fall. And the video that we linked in our profile next to some of the content that you could watch and other content that we linked to that's great for copy trading. In case you don't know what to invest in, you just want to make some money, do that. Different accounts like WeBull, Robinhood, you find links to that. We get free stocks, you get free stocks in exchange for clicking that link and registering. And then, of course, we have StartTrading.com with a free trading course on how to trade. So we also will be covering SPACs in there. But for this is for this instance in time, you need to look at your stocks holistically, especially these SPACs, and see where they are in that wavelength of rumor, spike, fall, acquisition, spike, fall. We are just in that fall, according to Mr. Desjardins, and we agree with that theory, and that's just where we are right now. So thanks for watching, StartTrading.com. Make sure you like and subscribe. Again, Monday, make sure you set those trailing stop losses. I'm going for my 3% rule. With the stocks that I believe firmly are going to drop, I will go with a 1% rule. Because if they don't drop 1%, great, they'll shoot on up. And just watch, make sure you have alerts when they do sell off so that you know when they sell off so you can watch it to make sure it doesn't then spike right after you sold off. Give it 30 minutes after that sell-off to see if the price continues to go down or if it corrects itself and goes back up, so you know when to get back in to make sure you don't miss the jump as well. Monday could be a dip and then shoot, so just keep that in mind. And thanks for watching. Mark Bauman, StartTrading.com.